A seismic shift is rocking the global economy, and almost no one in Washington saw it coming. The United States has just slapped China with tariffs as high as 245%, targeting everything from electric vehicle batteries to solar panels and telecom gear. And while the White House calls for negotiations, Beijing is responding with a series of bold, calculated moves, weakening its currency, boycotting American companies like Boeing, and rerouting trade to Europe and Southeast Asia. With a massive trade surplus in hand, China is aiming to sidestep the dollar and redraw the rules of global commerce. Today, we're breaking down how China's strategy is flipping the script on the trade war, sidelining US leverage, and accelerating a split in the world economy. Let's start with the tariffs. The US delivers a gut punch. Tariffs up to 245% on Chinese imports, targeting some of the most advanced sectors of the Chinese economy. At the same time, Washington extends an olive branch, inviting Beijing to the negotiating table. Is this hardball or a sign of desperation? It's a diplomatic paradox, punishment and peace in the same breath. Some in Washington believe that pressure will force China to make concessions. But China's silence signals a different read. Escalation isn't leverage, it's proof that the US is running out of options. While markets briefly rallied on the prospect of talks, the reality of tariffs quickly sent key import indices tumbling. Investors aren't buying the idea that pressure and peace can coexist. Now let's talk about the fallout at home. California, with $166 billion in annual Chinese imports and accounting for 11% of US GDP, becomes the first battleground. State officials and a coalition of business leaders warn that the tariffs threaten over 140,000 jobs, especially in tech, manufacturing, logistics, and retail. Even states like Texas, which rely heavily on exports to China, are quietly raising concerns. Politically, the backlash is most visible in California, where lawmakers are framing the tariffs as an assault on state sovereignty, not just a trade dispute. Meanwhile, the Federal Reserve faces a no-win scenario. US inflation is climbing, driven by tariff-induced price hikes, while GDP growth is slowing sharply. If the Fed raises interest rates, it risks pushing the economy into recession. If it cuts rates, it could further erode confidence in the dollar, which has already dropped against a basket of global currencies. Central banks in India, Brazil, and Saudi Arabia are reducing their US Treasury holdings, signaling a lack of faith in the American financial system. The Fed is walking a fraying tightrope with no global rescue in sight. So, how is China responding? With deliberate silence. No negotiations under pressure. This isn't passivity. It's a tactical refusal to play by US rules. Chinese officials see talks as validating erratic US policy, and instead are buying time while shifting global trade elsewhere. On social media, nationalist sentiment is surging, with negotiation framed as surrender. China is wielding indifference as power. Then comes retaliation. China announces a 125% tariff on US aircraft semiconductors and construction equipment. Boeing is hit hardest, losing billions in pending orders as China's aviation authority cancels all Boeing purchases. Meanwhile, Airbus steps in and inks a new supply deal with Beijing. China isn't just retaliating, it's replacing US suppliers and signaling a fundamental shift away from economic interdependence with the United States. But the real game changer is China's currency move. The People's Bank of China orchestrates a devaluation of the yuan, making Chinese goods about 8 to 12% cheaper in dollar terms. This pretty much neutralizes much of the pain from US tariffs. The result? There's a surge in Chinese export orders from Europe and Southeast Asia, even as exports to the US drop sharply. China's exports to ASEAN and the EU are soaring. These aren't just fluctuations, they're realignments. China is also bypassing the dollar by finalizing a 25-year trade pact with the European Union. This deal streamlines green tech exports and shifts trade away from US ports. The agreement includes contracts denominated in yuan and new dispute mechanisms outside the World Trade Organization. Chinese giants like Huawei and BYD are expanding in Indonesia, Hungary, and Poland, further reducing exposure to the US market. This is functional decoupling. Trade isn't collapsing, it's being reconfigured. China's massive trade surplus is being redeployed to fund industrial expansion, not just parked in reserves. Billions are being funneled into semiconductors, electric vehicle subsidies, and new yuan clearing banks across Eurasia and Africa. This is fueling international adoption of the yuan without triggering inflation at home. As of now, over 60 countries conduct more than 15% of their trade in non-dollar currencies, double the level from just a couple of years ago. The yuan's share in global transactions is at a record high, while the dollar's share has dipped below 40% for the first time in over a decade. Brazil is settling oil imports from Angola and Russia in yuan. India is pushing for rupee-based settlements. Even US allies like South Korea and Germany are hedging with yuan-denominated bonds. The world is moving toward bifurcated financial blocks, not just political alliances. So, what does this all mean? China is no longer playing by the old trade war playbook. By weaponizing its currency, redirecting exports, and mobilizing its surplus, Beijing is insulating itself from US pressure. With tariffs capped, debt ceilings looming, and the dollar's dominance no longer absolute, the question isn't whether we're in a trade war, it's whether this is the last the US gets to lead. China's next moves could redraw not just supply chains, but the entire global economic map. The world is watching, and the stakes couldn't be higher. If you found this breakdown insightful, don't miss our next deep dive on how these shifts could impact your investments and your daily life. Stay tuned and make sure you're ahead of the curve. Please leave a comment below and let's keep the conversation going. And have a great day.